Welcome, listeners. This deep dive is your shortcut, your way to quickly get a clear picture of the key moves happening in finance, especially what we're seeing in the Seoul Economic Daily's financial section. Today, we're digging into, well, three big things really shaping how finance is changing right now. We'll look at the strategies the big financial groups are using to, stay ahead, plus some really important shifts in rules about managing long-term debt, and also what's happening with community finance and the sometimes wild world of digital assets. Lots to cover. Okay, let's unpack this.
Right. And when you talk transition, you have to start with the giants, how they're shifting gears. Shinhan Financial Group is a key example here. Under Chairman Jin Ok-dong, they've shown, frankly, pretty impressive resilience and growth, too, even with these high interest rates and, the shocks in the real estate market since 2023.
Yeah, it feels a bit like a comeback story, right? Built on managing risk well. And the numbers, well, they speak for themselves. End of 2022, total assets were, around 664 trillion won.
Something like that, yes.
And by the middle of this year, 2024, it jumped to 752.6 trillion won. That's,
Right.
hold on, over 88 trillion won more. That's like a 13.29% jump in under 2 years. That doesn't just happen.
Exactly. It's not just size, though. It's how well they're using it. Their profitability metrics, they're looking much better. Just in the first half of this year, they had a record net income, 3.0374 trillion won. And maybe even more telling, their return on assets, the ROA, climbed quite a bit to 0.84%. And ROE, return on equity, hit 11.4%. That's strong.
Okay, so for listeners not buried in spreadsheets, why should these ROA and ROE numbers catch our attention? What's the takeaway there?
Well, think of ROA like this. It shows how good the bank is at using everything it owns its assets to actually make money. If that number goes up, they're not just sitting on dead capital. And ROE, that's even sharper. It tells you how well they're using the money that shareholders put in, hitting 11.4%. That means they're getting really efficient with capital. It suggests, sustainable health, not just the flash in the pan.
Right, makes sense. And a lot of this isn't just from Korea, is it? I heard the global side is doing really well.
Oh, absolutely. The global division had a record first half, profit of 431.5 billion won. They built up really solid bases in places like Vietnam, Japan, Kazakhstan.
So that diversification helps protect them a bit, less reliance just on the home market.
It does. And you see that careful strategy in their lending mix back home, too. Shinhan Bank is taking a very specific approach. It helps them sidestep some of that criticism about banks just making money off high interest rates. Right now, they have the highest ratio of corporate loans among the big four banks. 54.5% of their lending goes to businesses.
So leaning into productive finance lending to companies that are actually growing the economy, not just individuals buying houses.
Precisely. And you see the flip side, too. Their ratio for housing mortgage loans, it's the lowest of the four, just 22.3%. It's clearly a very deliberate strategic choice, good for the national economy, and it addresses the social worries about banks pushing too hard on home loans.
Speaking of deliberate strategy, Shinhan isn't just reacting. They seem to be actively building the future, especially with AI and digital assets. They've even restructured, right? Created a group-wide AX and digital division.
Yes, and also a separate AX innovation group just within Shinhan Bank itself. It's all about speeding up that digital transformation.
AX meaning AI transformation.
That's it. The T is for transformation. So the group level sets the big picture strategy. But the AX innovation group inside the bank, that's like the engine room, their job is to get AI tools into everyday banking, create new stuff for customers, and they're backing it up with cash. They've put, 77.5 billion won into AI startups since 2022.
Wow.
Yeah, AI makes up about 15% of their strategic investments now.
And the other big piece seems to be stablecoins. Chairman Jin himself has called them out as key, right? He met with Tether and Circle executives.
He did. The two global leaders. That's a massive signal. This isn't just dipping a toe in the water. Shinhan Bank is actively beefing up its digital solutions team specifically for stablecoin projects and this deposit token business they're talking about. Like Chairman Jin said, these things, AI agents, stablecoins, they're the key drivers that could basically rewire finance and create new value for customers.
So they see it as fundamentally changing banking, not just tweaking it.
Exactly. Rewriting the rule book.
It's a huge vision. But they haven't forgotten the community side either. We should probably mention their delivery app, Tongyu.
Ah, yes, Tongyu. That's a really interesting example of, you could say, finance with a social conscience. The big draw, really low commissions, like around 2%, and no advertising fees for the small business owners using it.
So it directly helps those small shops keep more of their earnings.
Right. And they also offer financial help tied to the app, like loans with interest subsidies. It's grown quite a bit, over 6.4 million members now.
Okay, so Shinhan Bank itself is back on top, the leading bank after 6 years. But looking at the whole Shinhan group, what's the main hurdle left?
It's really the non-bank parts. While the bank is firing on all cylinders, analysts often point out that the investment arm, insurance, the card business, they aren't quite keeping pace. For the group to reclaim that leading financial group title, those other divisions need to step up. That seems to be the key challenge now.
Okay, let's shift gears a bit. Staying with institutions focused on maybe the broader public good. Let's talk about managing debt. There's been a major policy shift from the Korea Asset Management Corporation, KMMCO. First big overhaul of their long-term delinquent debt policy since 2006, I read.
That's right. And this is huge for potentially millions of people stuck with old debt. The core problem with the old system was, well, KMPL could just keep extending the statute of limitations on debt they'd acquired. If you couldn't pay, the deadline just kept moving. The debt effectively never died.
Wow, like a financial life sentence if you genuinely had no way to repay. So what's the big change now?
It's actually quite simple but profound. They're limiting the extension of the statute of limitations to one time only, just once,
Okay. And one extension adds how long?
10 years. So by capping it at one extension, KMMCO is basically setting an end date. It means a huge chunk of this long-term bad debt, estimated around 2.9 trillion over. One will finally just expire within the next, say, 10 to 20 years.
That must be a massive relief, just ending the constant collection pressure for people who really can't pay. Sounds like it fits a broader social goal.
It does. And it complements other government programs like the SADOYAC Fund. But those often have money limits. KMCO's move fills a gap because it focuses on how long the debt lasts, not just how much. Oh, and they also added rules to write off inherited debt if the person who died had no assets left. That protects families.
So with a public body like Cam & Co. making this move, does that put pressure on private banks and lenders? And what about, the moral hazard argument?
Absolutely, on both counts. Because KMCO set this precedent limiting debt collection, there's an expectation. Regulators will push private finance firms to do something similar, be more humane with long-term collections. And yes, the moral hazard debate is definitely there. Will people default on purpose knowing debt might expire? It's a risk. But right now, the focus seems to be on giving relief to those who are genuinely stuck.
Okay, interesting. Let's zoom in now, away from the big banks and policy, to the community level. The Daegu Woryong Saemal Gyemgo, a credit union, been around 54 years.
Yeah, and their whole philosophy is simple but powerful. The credit union exists only if the community exists. And it's not just words. All 22 employees, every single one, is in their Nanumi Volunteer Corps.
Wow, all of them. What do they do?
It's ongoing stuff. They have 3 dedicated volunteer groups doing things like cleaning for the elderly, running meal services. It's built into how they operate.
So community support isn't just a side project, it's core business.
Exactly. And it seems to pay off financially, too. They're stable. First half of the year, assets were 443.4 billion won, net profit 1.3 billion won. And importantly, their delinquency rate is low, 2.22%. It shows that building that community trust, it actually creates a solid financial base. Maybe makes them less vulnerable to big market swings.
Makes sense. Okay, one last stop. The very fast-moving world of digital assets. Bithum had an incident recently with USDT.
Yes, a very sudden high-impact event. October 11th, there was a brief liquidity crunch. It caused the price of USDT on their lending service to just skyrocket, momentarily hit 5,755 won.
Ooh.
Yeah. And that triggered forced liquidations for a lot of users borrowing against USDT, causing major losses for them.
Ouch. How did Bithum handle that? Must have been chaotic.
They reacted incredibly fast, actually. Announced a compensation plan within like 24 hours. They promised full support for investors whose positions were liquidated automatically during that crazy spike. Specifically, they said they'd prioritize anyone whose settlement price was higher than the peak price on other major exchanges, which was around 1,700 won.
So compensating them based on a more reasonable market price, not the insane spike price.
Exactly. It's a crucial step, trying to build trust in a market segment that, let's be honest, isn't always known for strong investor protection. Quick action was key.
Okay, so we've touched on Shinhan Financial's ambitious strategies driving this transition, KMPOO's really significant debt roll changes, and then the resilience of community finance alongside the rapid responses needed in digital markets. Quite a range. We'll be back soon with more rapid and essential updates for you. This has been the Seoul Economic Daily's Insight. Thank you for diving deep with us.